The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Tuesday, everybody. You're watching Squawk Box Show with the magnificent Juliana Tattlebaum, back from her long weekend, and myself, Steve Sedgwick, and these are your headlines. Nvidia says it expects to get clearance from the US government to resume selling a key AI chip in China, with deliveries set to begin soon.
Chinese growth tops expectations in the second quarter, driven by domestic consumption. But concerns grow as the threat of a trade war with the U.S. continues to loom large. And Trump's Ukraine U-turn. The U.S. president announces new weapons deliveries for Kyiv, including Patriot missiles, while threatening Russia with new sanctions if there's no ceasefire.
We're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is. That can be more simple.
I am the worst colleague, I really am. It's like you had a day, you're officially in the diary, but you just keep going to all these amazing weddings around the world.
It's true. It was one of my allocated days off, yes, so I don't... I know. But thank you for calling me out.
No, was it great?
It was wonderful.
No, it's only because I missed you.
Yeah. Oh, it's very sweet.
Genuinely.
Well, I'm very happy to be back. I can't say that I missed you while I was on the beach in Portugal, but I'm really happy to be back.
I'll tell you what I don't miss. I don't miss the repetition on an almost daily basis of script writers having their script ready before they've seen the numbers, or us all having a dialogue before we've actually seen the evidence. We all do it. I do it as well. So it's like on the Chinese growth data. I know we're going to come back to it in a few moments' time. It's like, pick your headline. Chinese growth beats expectations despite Trump tariffs looming. Oh, China growth slows as trade turmoil weighs on the economy. They had a 5% handle growth figure. Now, I know we have some contention about the figures, but long and the short of it is, if you've got a 5% growth handle, and if we take it at face value that it is accurate, then that's a knocking the ball out of the park figure, despite the global turmoil. Now, there's a lot of things going on beneath the surface. People rushing forward their exports because they're worried about tariffs. Property market remains under pressure. But 5% is 5%. Show me a Western nation who wouldn't relish and salivate over 5%.
I think there's no doubt about it that people are looking for impact here, whether it be on the China data or on the CPI data that's coming out tomorrow. Expect to see similar headlines around that. Even if we don't see a big uptick in inflation in the U.S., people are waiting for it. So I think that certainly is a danger here as we interpret fresh data. We're looking for that tariff impact across the board.
Yeah, and just going back to the other story, look, we're both happily married to other people and we love our spouses. But I'm like that grumpy husband who, after his wife goes out for a big night out and she gets in at 3 and has had a wonderful time, and I'm sitting there going, oh, well, I had a boring time. Telly was rubbish. So it's great to have you back.
Well, it's great to have you back in your final week before you go on holiday next week.
Oh, don't call me out.
All right, we are going to push on. We've got another story in focus this morning, and that's Nvidia. Nvidia says it's filing applications with the U.S. government to resume shipments of its H20 chips to China, which it expects to be approved soon after the Trump administration eased export restrictions. The U.S. move to ban exports of the chip to the country forced Nvidia to write off billions of dollars in inventories, with CEO Jensen Huang saying it had to forfeit $15 billion in sales. Now, Huang is expected to hold a media briefing in Beijing tomorrow. This is an interesting story because clearly it is to some extent the result of all the lobbying effort that Jensen Huang has put in on both sides here. And, you know, it's hard to know how much to tie this to broader U.S.-China relations, but certainly this is a de-escalation, not an escalation when it comes to relations to some extent.
Look, I'd like to think I'm fairly well read on the implications of banning goods from third parties and what that does to the technological evolution thereafter. And historically, having genuinely read the Bibles on chip evolution from the first days post Second World War, the acceleration in the late 50s and 60s to the current situation, and when America has allowed third parties to use their chips, because it was historically America that's run the semiconductors globally, and when it hasn't, when it's tried to ban them. And look, the history is fairly clear. if you keep third parties, whether it was the Russians in the race earlier on or the Chinese or whoever it is, involved in your ecosystem using your product, there is less need to innovate. There is less need for autarky. Ergo, I've said it again. I get in trouble for using that word. I'm getting in trouble. There's a whole episode about that. I'll have to tell you about it.
I know. I'm curious what the ergo
there is. There's a whole thing
is.
about it. There's trading rooms whooping with joy all over the fact that I've mentioned it, and it's only 5 minutes past 7. But therefore, consequently, if you keep them in your ecosystem, you keep them reliant, you keep them needing less innovation. But if you ban them from the product, they will then have to seek innovation, and that's what Huawei and the Chinese have done whenever there's been bans on their product, on the other products that they were using.
That's exactly what Jensen Huang has said, in not, and I would argue not as articulately as that, but that
he didn't use that word either.
He didn't. That's true. He didn't use that word, but that's exactly what he has argued. That the real risk here is that the rest of the world doesn't end up using the U.S. infrastructure here to build out their ecosystem, and that's the huge problem down the line.
That is the key word, ecosystem, because it's not just America versus China. China using American chips, China using their own chips, Americans exporting chips to China or not. It's about owning the infrastructure, owning the ecosystem on a global basis so that you will be able to export your product as America Inc., as Nvidia, to the rest of the world, and owning that infrastructure and preventing the Chinese from filling that space. You don't want to. It's kind of like a war type situation as well. If you take out a regime in a third party country, you have to replace it with something, or another political system will come in. And dare I say, Africa's a great case in point. When the West turned its back on Africa in terms of geopolitical interventions, then the Chinese and the Russians jumped in and, of course, have got fairly strong positions in the resource export from a lot of those African countries to China and Russia. So if you leave a vacuum, someone else will fill it.
I think, in terms of whether that's going to happen with Nvidia, it feels like it is still early days, and at this point, the Chinese are still showing a preference for Nvidia chips. And we know the Chinese government has encouraged the Chinese to use domestic suppliers, to use Huawei and the like. But at this point, there is still a preference for Nvidia. But whether that's going to remain the case, that is still an open question.
Well, we've got a package coming out. I'll tell you the whole evolution of that word I can't mention anymore now. Apparently, I use it rather a lot. Again, China's economy grew more than expected in the second quarter, with GDP up 5.2% on the year, despite the impact of US tariffs. But the figure still came in below the first quarter's 5.4%. I mean, Elaine has more from Hong Kong. Elaine, it's fascinating looking at the different headlines. Some people saying it's okay, better than expected, but it's still lower. Others are saying, look, they're knocking the ball out of the park. You're going to get to the truth.
And good to see you. So the slightly better than expected GDP growth in the second quarter was largely driven by strong exports, particularly to non-U.S. markets. And that was also helped by the trade truce reached in May with the U.S., however fragile that is. And the question really is what's going to happen in the second half of the year when tariffs bite. Economists expect exports to slow, and there could be payback for front-loading shipments earlier this year to get ahead of the tariffs. But in terms of consumption, that's where, the picture is still very much mixed. Consumption being the other slice of China's two-speed economy. Retail sales grew 4.8% in June and down from 6.4% in May. So that suggests that the earlier strength we saw in retail sales was largely driven by state subsidies, such as trade-in programs for things like cars and home appliances. And that underlying organic demand, this suggests, is still relatively weak. And weighing on demand, of course, is the housing slump in China that has only deepened, as the latest data show. Home prices have been falling for more than 2 years now, and there's little sign of that bottoming or stabilizing. New home prices in June were down 0.3% month on month, and that's the worst drop since October. And housing makes up a large portion of household wealth in China, so that slump is going to keep weighing down on consumer spending and confidence. So overall, the government could be on track to meet its 5% GDP growth target this year, but really it's about what's going to happen in the second half of the year, and that's where the uncertainties are. So if there are more stimulus measures, and if China and the U.S. reach a substantial deal, there could be potential upside, but the underlying indicators do point to more trouble ahead. Back to you.
Brilliant. Thank you very much indeed for that report, Elaine. Well, let's expand upon this now with Duncan Wrigley, who is Chief China Economist at Pantheon Macroeconomics. Really good to see you, Duncan. I hope all's well with you. Look, again, it's very, very hard to look at one quarter's figures at the moment, especially, dare I say, a set of quarterly figures that never get revised. And it's always, a little bit of a bugbear about the Chinese data. But the fact of the matter is, we are amidst the turmoil that began on April 2nd. Is it clear that we can't get a clear picture yet? Or actually, are China's economic growth levers actually beginning to work again, regardless of what's going on with the tariff situation?
Yeah, I think we can get somewhat of a clear picture. So it's true that China's pulled the economic growth levers. But I think another key factor is basically exporters cut prices. As a result of that feeding back into the economy, what you see is the weakest nominal GDP growth since Q4 2022, before China reopened. So basically, export demand would have slowed. Exporters cut prices to keep sales up, but that's fed back into the economy, exacerbating China's deflation issue.
Duncan, it appears that there is some form of deal which is going through the motions between the Chinese and the Americans as well. Certainly it doesn't appear to be that at the moment is where the 30% tariff levels plus are going to land. So let me just park that for a moment. I know it's a big park, but I want to park that because actually what I'm really interested in is what is going on domestically in China. And as you and other great commentators have pointed out, we are a long way from stability in the housing market. We are a long way from seeing the domestic drivers from the Chinese Communist Party downwards working. Or are we? Are we seeing the green shoots of recovery domestically and this Chinese consumer, which is saving heroically, actually beginning to spend again?
I would say the Chinese consumer is proceeding along at a pretty sluggish pace right now, frankly. The housing market, at the current run rate of reducing excess supply, still has perhaps 2 years, perhaps a little less to go. That could speed up if there's more policy support. Consumption, yes, it's been boosted in parts by this consumer subsidy program, but what you see is people spending more on that. Appliances, digital devices, cars, but reining back spending elsewhere. And basically people are worried. The labor market is sluggish. That today's data shows that wage growth fell in Q2. Officially measured wage growth fell in Q2 from Q1. And, data on the labor market isn't great, but for what we can tell, it's still pretty soft.
Duncan, let me dig into the consumer in a little bit more detail here and ask about luxury specifically. I think as we approach earnings season, a lot of investors in European luxury are trying to get a read on how the Chinese consumer is doing and whether we are seeing any kind of inflection there. How is the luxury segment specifically doing based on your channel checks?
Yeah, my understanding is you've got to divide the luxury channel into different parts. The sort of mainstream luxury channel, I think, is still under pressure. Your middle class consumers who might have bought luxury handbags and so forth are curbing spending compared with before, for the same reasons as I talked about sluggish consumption. But I think you do have a segment of the kind of ultra luxury spending where wealth has been preserved and those consumers are spending again. Now, some of that might be abroad, make it a bit harder to track data, but I guess the luxury brands themselves will have the best data on that.
So we'll have to wait and see what they say over the next couple of weeks. Duncan, we have spent a lot of time talking about the headline tariff levels, the direct tariff levels between the U.S. and China. But increasingly, there's a lot more focus on Trump's threats around transshipments and targeting countries like Vietnam, where Chinese goods often hit before making their way to the U.S. Not a huge amount of clarity on how President Trump would define transshipments, what this would look like in real time, in action. But how significant are these threats around taxing transshipments from China through other countries?
Yeah, I mean, that is a judgment call. My judgment is that based on how the Trump administration has prosecuted the tariff war so far, I don't think they're going to be very good at enforcing and implementing transshipment rules to really isolate China. Yes, the US does have leverage to lean on smaller trade partners like Vietnam, potentially other Asian partners to put in place some of these transshipment high tariff rules. But I think that probably exporters will still find ways around. And, the US Customs Force probably doesn't have enough personnel to really enforce it and check it properly.
Might explain why markets have largely looked through a lot of these tariff threats over the last couple of weeks. Duncan, what is the outlook for H2 here? It feels like the real hit is likely to come up in the second half of the year when it comes to the impact on China's growth. So what are you thinking for the second half?
Yeah, second half, I'm thinking domestic demand still pretty much the same, frankly. China will keep adding a bit of targeted support, but not a mega stimulus, just to keep things ticking over, holding back the big guns in case things really blow up. So that really puts it down to the export side. And, I think it's quite likely that, yes, US and China might have a narrow framework deal now, but most likely tensions are going to blow up again. And I wouldn't be surprised to see more tit-for-tat tariff escalation or other measures happening later in the year, hitting China's export growth.
Duncan, let me come back to the Nvidia story. I know that's not your wheelhouse as such, but I made a couple of assumptions about if indeed the Americans do ultimately block more advanced Nvidia chips getting to China as well, then the Chinese will fill the gap. Do you think technologically at the moment, and we've seen obviously the DeepSeek news right at the start of the year as well, that actually that assumption is correct, or do you think actually it's flawed, that actually Chinese technology, whether it be on AI, whether it be on EV, whatever it may well be, will ultimately fill the gap if the US does use barriers as another tool for the most advanced technology getting to China?
Yeah, I mean, my understanding is that the Huawei AI chips are comparable to the Nvidia ones that have been restarted in most ways. I mean, there are some workarounds. They use a big stack of chips. It's a bit less efficient, more power consuming, but China has cheap electricity. I think maybe where Huawei is a bit lagging behind is on the software and that kind of support side of things. But I think if Nvidia chips were cut off, Chinese AI developers would be able to use Huawei and find workarounds. And plus they have other advantages in terms of, number of people doing research and coming out of universities as I suppose DeepSeek's innovation shows. So I think they would ultimately catch up.
Duncan, thank you so much for joining us this morning to help us digest the numbers. Always great to have you. Duncan Wrigley, Chief China Economist from Pantheon Macroeconomics. We're going to take a break, but coming up on the show, a presidential about turn. The U.S. announces new weapons deliveries for Kyiv, including Patriot missiles, while threatening Russia with crippling secondary sanctions if there's no ceasefire. Plus, the EU finalizes another set of countermeasures against 72 billion euros worth of American goods. We'll tell you what made the list. And as UK Chancellor Rachel Reeves prepares to outline her vision for financial reforms and competitiveness in the City of London, we'll check in with the Lord Mayor of London, Alistair King. You can catch that in about half an hour. Welcome back to the program. Let's get you a check on U.S. markets and how they traded in the lead up to CPI day today. I said at the start of the show it was tomorrow. I am one day off after one long weekend for myself, but it is today. We've got the CPI print coming out this afternoon. A lot of focus there. Yesterday we saw all three of the majors close higher. The NASDAQ closing at a fresh record high, boosted by a bounce in Palantir shares. Dow Jones added about 20 basis points or so, and the S&P 500 edged higher by about 14 basis points. Pushing on and taking a look at European futures. This is the early picture of European trade. We're looking at equities opening modestly higher. You've got decent gains indicated across the board, led by the Xetra DAX, which is looking at about a 0.4% jump at the open.
Yeah, fascinating situation in the markets at the moment. When does it stop is the question, and the answer is who knows. Okay, the really fascinating situation going on in Washington about what kind of sanctions and what kind of support for Ukraine is coming out of the US Capitol. The US President now, Donald Trump, has announced new weapons for Ukraine, including Patriot missiles, expressing frustration over ongoing Russian attacks. Speaking with the NATO Secretary General Mark Rutte in the Oval Office, Trump said weapons will be sent to Ukraine through the alliance, which will also pay for them. The US President also handed Moscow a 50-day deadline to reach a peace deal with Ukraine or face what he called secondary tariffs of around 100% on buyers of Russian exports. Rutte, for his part, said European allies are stepping up as he and Trump hailed the deal.
I think this is a chance at getting peace, or it's just going to be the same thing. I have to tell you, Europe has a lot of spirit for this war. A lot of people, when I first got involved, I really didn't think they did, but they do. And I saw that a month ago, and you were there, many of you were there. The level of esprit de corps, spirit that they have is amazing. They really think it's a very, very important thing to do, or they wouldn't be doing it. Look, they're agreeing to, they're paying for everything. We're not paying anymore.
You want Ukraine what it needs to have to maintain, to be able to defend itself against Russia, but you do want the Europeans to pay for it, which is totally logical. And this is building on the tremendous success of the NATO summit. The 5%, but also the decision to keep Ukraine strong and the decision to increase our defense industrial production. So based on that, that was Europe stepping up. This is again Europeans stepping up.
Ukrainian President Volodymyr Zelensky thanked Trump in a post on X, saying the leaders had held a very good phone call discussing the necessary means and solutions to provide better protection from Russian attacks. There's a lot of elements to this, many elements. Firstly, the gratitude being expressed very publicly by Zelensky. Of course, that was where the attack started on him in the Oval Office by J.D. Vance, and saying, you've never thanked us, you never thanked us. Well, they had thanked, and now Zelensky very, very quick to build on the improved relations. Of course, they were at the Pope's funeral, Trump and Zelensky, the very poignant picture of them both talking at the funeral. So the relations between Ukraine and America have improved dramatically. The relations between Trump and Zelensky have improved dramatically. Second point, a lot of criticism about Rutte's what was called sycophancy towards the US president. Well, I didn't join that criticism. I actually think it was incredibly logical that if you want the most important military in the world, the most important military partner within NATO to support NATO initiatives and ongoing, you have to actually show a bit of love to that man. And we know that Donald Trump likes very, very public displays of gratitude, very public displays of adoration, for want of a better word. And I think Rutte did exactly the right thing diplomatically. And, of course, backed it up by, as he said there, Europe committing to 5%, which is 3.5% on GDP on defence, plus another 1.5% on associated costs as well. So they're ticking a lot of boxes. At the same time, Putin is showing no signs of wanting anything other than complete domination of Ukraine, and that's frustrating US president. And you've got two pincers going on in Washington. There's that three. One, more weapons for Ukraine. Two, the presidential initiative now on potential sanctions. And three, which is also not to be ignored, is the Lindsey Graham initiative in the Senate, which is now going to be put on the back burner whilst the president tries his own initiative to have enormous sanctions on the Russians.
But more weapons from the U.S. paid for by the Europeans.
Yeah, well, paid for, I think there's opacity there. Yes, paid for by Europeans, but paid for via NATO as well.
Yeah.
And I kind of
Which
think,
has contributions from the U.S.
Which has mostly contributions from the U.S. as well. So I'm interested to see where that transpires a bit further down
It was
the line.
interesting, though, to hear the rhetoric really line up between Rutte and President Trump. Mark Rutte was very happy to say that this was the Europeans stepping up. This was them delivering on their promise to spend more, whether it's actually coming directly from the Europeans, to your point. is, you know, a little bit of a moot point. The message here is that the tone has changed dramatically between the NATO group and President Trump. So much more conciliatory, a complete about face, really, from where we were just a couple of months ago. I think in terms of these secondary tariffs, it's a similar point to what we were discussing with Duncan on transshipments of Chinese goods through other countries. How do you actually implement these secondary tariffs? So we're talking about tariffing India and China, who trade with Russia, actually creating a system for monitoring, tracking, and then tariffing these countries. Really difficult. So at this point, it seems like more of an open threat rather than an actual tangible
But the numbers were enormous. The bill crafted by Graham and Blumenthal, a Republican and a Democrat, so it had 85 co-sponsors in the Senate, would have authorized, and again, it's on pause now, would have authorized Trump to impose secondary tariffs of at least 500% on imported goods from countries such as Brazil, India and China that still trade with Russia. And the point about the oil markets is just one more point there is the reason why Trump didn't want to go with this originally and why Biden didn't go with it as well is because they were very concerned about what it meant for the oil price and what it meant for the price that US consumers were paying. Now they clearly feel that actually with the OPEC production improving as well and actually a bit of spare capacity out, they clearly feel there isn't going to be such a knee-jerk reaction to the upside if indeed these sanctions were to go on Russian products.